So on this one, I'm just going to do a quick overview of what like support and resistance levels are, and then also do another quick overview of what like risk management is pretty much. So on this particular chart, I have a lot of shit on it and I don't really want to confuse you, but the things you have to focus on are like the marked out blue boxes pretty much. So as you can see, as the price goes up and it bounces up and down, you can see like a main area that it keeps on coming down to and bouncing off of around this price range right here. This is where I marked out the blue box. That's what we call a support, somewhere that the price has a hard time going down through. And a resistance is a place where price has a hard time going up through. So as you can see right here, as price broke through the previous support, it came back up and tried to break through it, but it's acting as a resistance now, so it got pushed back down. So that's pretty much what it is. The best way, another way to explain it is, imagine you're in a room, support is the floor, and resistance is the roof. And imagine the roof's like low enough that you can jump up and hit your head through or head on it. If you try to jump and hit the resistance or the roof, yeah, it's possible you can break through, but more than likely what's going to happen is you're going to smash your skull and fall back down. So that's pretty much, and then it's the reverse with the floor or the support. And then when it comes to risk management, just a quick overview of it. It's just you're not risking like half your capital on a single trade. So like, let's take this trade for example that I actually took. The risk to reward ratio is 1 to 3. So I risk 1% of my entire account to make 3%, and it actually hit my take profit like yesterday. So I made 3% of my account on it. I think I actually risked 2%, but so it was 6%. But anyways, a lot of people say don't risk more than 3% per trade, and I would agree with that. Except if you're trying to challenge a prop firm, then I would risk lower, even 0.5%, because then it gives you more room to lose trades. But basically, don't risk 25% of your account. Don't risk 50% of your account. Only maximum, I would say, risk 3% if it's your own personal capital, not prop firm challenge, and risk small, like nothing pretty much. And if you have a good strategy, then you can make money even if you have a below 50% winning rate if your risk to reward is high enough. And that's pretty much those two concepts. I can dive deeper into like trading strategies in terms of like the moving averages and bullish engulfing, bearish engulfing, or what bullish trend is or bearish trend is. But yeah, the main things I wanted to teach you about was the support, resistance levels, and then risk management, because I might break down a couple of the trades I've taken like this one, and that's pretty much all you need to know for them.